in the last few trading sessions has been the dairy space, and this after strong results coming in from Hatsun Agro, followed up by Dodla Dairy as well. Dodla Dairy, in fact, in the last 7 days is up nearly 20%. Today as well, the dips on the stock have been bought at the high point of trade as we speak, 19% in just the last 3 or 4 trading sessions. So we have the management with us to decode their numbers, where the company saw good revenue growth, importantly expansion in gross margins, as well as good contribution coming in from their value-added products as well, which now stands at 32%. Sunil Reddy Dodla, who's the MD, joins in. Thanks a lot, Mr. Dodla, for joining in. That really is the big question. Where do margins stabilize going forward? Because now commoditized parts of the business are lower, value-added product contribution is increasing. And going forward, like you've pointed out, the industry will benefit from the upcoming flush season. So do we see margins inching towards double digits at any point in this year?
Margins will keep increasing compared to last year, as you mentioned rightfully earlier. This is also coming because of we have this milk prices coming down because of having a flush season where the milk now has come back to the normal levels of production. So margins will definitely keep improving over last year. We'll only have to consider the stagflation that has been happening. So in terms of growth and margins, but in terms of absolute numbers, we'll definitely keep moving forward, growing.
So sure, your value-added product segment has done very well. It's a double-digit growth. Once again, 13% growth that we've seen compared to what you've done last year. And I remember you mentioning in the past as well that this is a segment you're going to focus on, considering that perhaps there are better margins here. Can you tell us what kind of growth are you looking at in the value-added product? Can you hold on to this mid-teens growth for FY24?
Mid-teens growth for FY24 will definitely be held, Ekta, because it is mostly driven also by a price increase that we have. And our ice cream portion of the business is also doing a little better than last year. So compared to that, I think we should be able to maintain our value-added revenue growth in the mid-teens.
Okay. Mr. Reddy, I just wanted to touch upon what inflation is looking like for the company, because we were just in conversation with a couple of economists earlier this morning, and they did mention that commodity prices have now started impacting emerging markets quite significantly. India in particular, it is food inflation. So for the company itself, what is the kind of food inflation that you are seeing, say, from a quarter ago, and what is your guidance on it?
I think for us, milk will remain stable for at least another couple of quarters. As I was saying earlier, we've entered into our flush season. We only have to be careful about our cattle feed, that the prices might go up, like you guys had earlier said, because of emerging markets getting impacted with grain price, and corn does contribute a bit to our cattle feed. So other than that, if the monsoon continues to be better, farmers will be able to use alternative feeds and be able to keep the prices low and going forward. And I think we'll be able to maintain. Milk will at least maintain its current price without having any much of inflation.
Right. Just wanted some granular details on what you have spoken already. You said that, operationally you will see an improvement in your EBITDA going forward, and your contribution from value-added products will increase as well. Where do these numbers stabilize? Because I was looking at your EBITDA, it hit 13% in FY21. Thereafter, it's been on a steady downtrend itself. So do we see it go back to those levels? And value-added, where does it stabilize as a percentage of your sales?
So our value add normally will increase by a percentage or two on a yearly basis because of both on the price and the volume front. I think when you look at our margins that we were looking at, we'll be always targeting between the double digits to the lower, just a bit lower than the double digits is where we keep targeting depending on the pricing. But I think on a consolidated basis, we'll be inching up towards the double digit. 13 was an abnormal year, which was, as I said, we used to keep saying earlier. But I think we keep targeting to reach our double digits.
Okay. And in terms of your current capex plans, what is the capex that you're putting on board? What is the capacity utilization that you're looking at over the next 1 year?
So basic capacity is we are now adding a cattle feed plant, which will be coming up into production pretty soon in a couple of months' time, which was basically almost 5 times the existing capacity of what we had earlier. If it was 2,000 tons a month, now we're going to move it up to 10,000 tons. The second thing is we have also acquired another unit in Kenya, which we are looking at getting up and speed into production by maybe October, November, but December by sure. That facility will also come into production. Regular capex in terms of procurement to take care of our increase in procurement is being done in terms of the number of chillers that we keep adding. And on the marketing side also, we have a bit of a spend coming up in terms of installing more of freezer capacities going forward, because and a little bit of brand spend in terms of visibility, so that will be there. So all put together, not much, because I think we've already spent 50% of our capex earlier. So now maybe another 60-70 crores for the current year.
Okay, considering the kind of competition we have in this space, Mr. Reddy, can you just give us a sense in terms of the pricing environment for the company's products, given a higher inflationary environment? Are you in a position where you can probably pass on prices to the consumer?
We have already passed on all the price increases that had happened for us previously, and now we have passed it on to the consumer, and we are maintaining that stable state. We will not see any further increase in procurement price. Therefore, we will not be selling the price, increasing the price for the consumer. So I think for the next 2 quarters, at least the stable state will maintain, and therefore the company will do well in terms of its profitability compared to last year.
All right. And final question, just before we let you go, how big can your animal feed business be? You said you are setting up a plant for your cattle feed as well. Orga feed as a proportion of your sales, how big does it go?
We would target it to reach maybe 10-12% over the years to come. Right now, it's very small. It's very in terms of things. But I think as a capacity, we can look at it as coming up to 10% of our revenue.
By when?
In another 3 years' time.
Okay, all right, we leave it at that. Thanks a lot for joining in. That is Dodla Dairy. It's almost a 30% rise in the last 1 month. So the street definitely likes what they hear as well. Let's slip into a quick break. On